So if you borrow that 100,000 on the 200,000 line and the rate drops to 5%, you can lock that in at no cost.
I did not know
And you
that.
just tell us the term. So it could be 5 years, 10 years, 15 years, 20 years.
Hello and welcome again to Conversations with Kendall. I'm Kendall Lutz, your real estate advisor here at Preferred Shore in beautiful downtown Sarasota. I have a wonderful guest today we're going to talk to in just a minute. His name is Matt Brame. He's the VP Consumer Development Officer at BayFirst. Matt Brame, how are you doing?
Great. Thanks for having me.
Good. I'm
Appreciate
glad
it.
you can make it here, and we've had a couple times, and you finally your wife let you come down. That's good.
That's it. Yep.
Matt is a HELOC, home equity line of credit specialist at BayFirst. The office number there, by the way, is 941-306-3468. If you're looking to get a HELOC, I'm going to tell you why you should here in a few moments and what the advantages are of that. Before we get into that, Matt, you and I met the Dad's Group, part of the PTO at Tatum Ridge. You are head of that group. In fact, before we get into HELOCs, you got a big golf outing coming up here pretty soon.
We do, yes.
You sponsor that?
I do sponsor it, yes. And we're always looking for more sponsors for that golf tournament.
When is that? Now, this will air before that tournament. When is that date?
Oh, boy. Throwing me on the spot here.
Yeah, October.
No, it's in November.
November. Okay, we got time, folks.
Hang on. Let's see. Let's pull it up here real quick. November 16th at Saranoa.
At where?
Saranoa Golf and Country Club.
Okay, sounds good. And that would be like at 8 o'clock in the morning, 6?
Yep,
7?
8 o'clock shotgun.
Okay. So if you're interested in playing there and getting a foursome, come on out, enjoy that. Talk to Matt or give me a call. We'll point you the right way. You want to sponsor any part of that event, let us know as well. It gathers, how many people could get together that day?
I believe around 120.
120 golfers?
Yep.
And another 20, 30, 40 staff are there?
Probably around 15.
Okay.
Yeah, we have cart people out, providing beverages and
having a good time.
People help with prizes. And
this money all goes back to?
Every dollar goes back to the school.
So
help support the daddy-daughter dance. We promote the staff and, give them meals and things like that throughout the year. And other little things. We get scholarships for fifth graders and things like that.
How many did you give
to? $2,000 scholarships.
Nice.
Yep. We might increase it this year, though. Depends on how well we do at the golf tournament.
That's right. So come on out and play and drink and support this function.
Absolutely.
And I've always said, I just had other folks on here. I had Barry, the president, the principal at Tatum Ridge on, and we talked about engaging and plugging in with these schools. And the more engaged you are, the more you can get out of your kids' education. You don't just drop them off and pick them up and wonder why their grades are terrible. So get engaged with the PTO, the board, however you can volunteer your time. Great way to help your kids out as well. Matt, tell us about your journey here. I'm from Chicago. I moved down here 4 or 5 years ago. Where did you come from? What's your background?
Yeah, great question. So I actually grew up here in Sarasota. One of the few. All my buddies kind of moved to bigger cities to try to make more money, and I'm like, no, this is paradise. I want to live here in Sarasota. I graduated from Sarasota High, then went to Florida Gulf Coast down in Fort Myers, and got my bachelor degree in business management. And had no clue what I wanted to do, but then kind of fell into banking because I knew they had weekends and holidays off. So that's how
guaranteed 20 days off.
Absolutely. So that's how I kind of got into banking and worked my way up to branch manager. And then most recently, BayFirst reached out to me to kind of kickstart their consumer lending. And so I do concentrate mainly on home equity lines of credit and home equity loans, but I also do auto loans, boat loans, RV loans, personal and secured loans as well.
If you need money, Matt's your man.
Absolutely. We're giving it away. We're printing it out.
It's like the federal government.
That's it.
And about the same rates as well. So I actually reached out to Matt, and I think for anybody out there, if you bought your home down here, 3, 4, 5 years ago, you have a hell of a lot of equity in that right now. and you can tap into that for a number of reasons, and we're going to talk about that. I reached out to Matt because he was in the dad's group, and also I saw he was at BayFirst, and we were talking about getting a HELOC in my house. Again, purchased a house 3-4 years ago, I think 450, 480, something like that, and you look at the values now, and it's well over 700,000, depending on what app you're using. But I thought this is a great way to get a home equity line of credit and have the money available, because it becomes difficult when maybe the market drops and the equity is not quite there. I don't see that ever wiping away. But maybe if it drops, or maybe you got bad credit all of a sudden and you can't get it. So grab it while you can, and I did. And we are adding a pool to the back of our home. We did not have a pool. So that'll be in place hopefully by Christmas, just in time for the warm months down here. So that's what I did, and I think it's working really, really well for me. The application process was a breeze, and the program I think he has in place, Matt, is like none other. So tell us about that program.
Yeah, absolutely. So it's we only lend on primary residences in the Tampa Bay area. And we can lend up to 100% loan to value. So what that means is, let's say your home is worth $200,000 and you owe $100,000, I can get you an equity line for $100,000 to go up to that 100% loan to value. What kind of sets us apart, we have no closing costs. We pay up to $2,500 in closing costs, which usually covers about a $400,000 home equity line limit. So typically the no closing costs, I guess I should restate that. And then the rate is very competitive, so it's primarily based on prime, and prime is controlled by the Federal Reserve, and right now it's 8.5. So that's up to the $250,000 limit on one of our programs. But it's just a great tool that if you do own your home, there's so many different things that you can use it for, because we don't monitor what you do with the money. But primarily people use it to remodel their home, put on a new roof, purchase a second home or investment property, or help pay for college or a wedding. I mean, the list goes on and on. So it's just really nice product to have that typically doesn't cost anything to establish, and you don't have to use it. So it can just sit there at a zero balance. There's no monthly fee, there's no yearly fee, and it can just give you the peace of mind of knowing that you have access to funds if and when you need it.
Yeah, so let's talk about that now. So for a minute, you have, like I said, up to $250,000, because it's kind of the max unless you get into some other details and so on. So we won't cross that bridge yet. But if you have that kind of value, you go out there, you have this availability to borrow that kind of money, and obviously you want to do this, thinking inside the box here, and instead of going crazy with it. But let's just say you did add a pool, or what I'm promoting also is a good way to get money to put down on a second home,
right?
Rental property, and now your money is making money. The sad part about today is that the rate's 8.5%.
Right.
But as you mentioned, you think that could.
The forecast is for it to go down.
Yeah.
So we're looking at multiple rate drops in the future here. No one has a crystal ball. That's just what the forecast is showing. But
what was it like years ago when we were all buying our mortgages at 3%, 2.5%? What was the prime then?
3.5.
3.5. Okay.
Yep, it was 3.5 for a long time.
So
and then it doubled in like a year and a half.
Yeah, doubled or
more.
To
8.5, more than doubled. Yeah.
So there's obviously they can go back down to 3.5, and you get a great interest rate.
Right.
You have $200,000 to put down on an investment property, and really branch out and increase your bottom line of your, the value of your properties. But now, I was told by a CPA, and I know you're not a CPA and you can't advise this, but if you are using, what he told me anyway, was if you're using this money in your home, and again, consult your CPA, if you're using it on your home to fix it up, to add a pool, fix your roof, something substantial in the home, that the interest should be deductible. If you're using it for a wedding, or a new car or something else, that's a whole nother issue. So talk to your financial advisor.
Yeah, no matter how you're using it, the accumulated interest will be sent in a 1099 at the end of the year. So
how
you can decide what to do with that 1099
what to tell the federal government you did with that.
Right.
Anyway, so that's an interesting. Now there are some pros and cons on the HELOC, and some other items that you have as well. Some other ways to borrow money. But let's talk about the pros and cons. We won't talking the cons too much. But what are the pros on borrowing this kind of money?
I mean, in my opinion, it's the fact that you don't have to use it and it doesn't cost anything to establish it, typically. So why not have that peace of mind, like I said, to know that you have immediate access to funds if something happens? Because we can't predict the future. I mean, you could need a new roof, or somebody gets into an accident, or a family member needs help. Like you have that access right away. And a lot of people, they wait until they need the access, to your point earlier, and maybe they don't qualify in the future because their job has changed or their credit has gone down, or maybe their house isn't worth as much.
Right.
So you got to take advantage of now.
And I think keep it simple. So if you have a $250,000 line of credit and you borrow $100, you're probably pretty safe. And I'm just hypothetically here.
Right.
But if you borrow up to $250 and then 2, 3, 5 years from now the home is not worth that much, you've got another issue then where you borrowed to the ceiling of your potential selling price, but you can't sell it for that much. Now you're stuck. So I think if you tap into it, halfway, whatever your limit is, but tap into it a little bit, use it what you want to use it for. It should increase the value of your home as well.
Right.
It's like my pool. I mean, I've tried to sell homes in the past, and with a pool and without a pool, there's a big difference in pricing. So that kind of value should come back to you. But yeah, if you're using it carelessly, and it can be a problem. And also, as you mentioned, get it while your credit's good, while you have a job, while the value of your home is high. Get it, let it sit there, use it when you want to. It's like trying to get a credit card when you don't have a job. It's just, you're not going to have it.
That's correct.
And usually you're talking about a credit score of what, again, minimum?
So I actually only need a 660 or higher with Experian. So as long as you have that and I can verify income, and you've got equity in your home, then we can establish a home equity line of credit for you. And
I would say a good majority of the homes here, unless you bought it in the last year or two.
But then again, even if you bought it yesterday and you put 20% down,
that's true. I
can get you access to that 20% down right away.
That's a good point. So. Wow. Now, we touched on a subject earlier offline. We were talking about flooding. Sometimes Florida homes flood. If you're on the coast, you're on a lake, you have a hurricane come through, you get some flooding. And up to recently, FEMA and others were saying, well, you only need flood protection insurance in these areas, and they'd X them out for you so you would know. We've seen some flooding now in areas that are not in flood zones, and some of those folks did not have flood insurance. Mm-hmm. So this would have helped had you had this already in your back pocket to fix up any damage that may have occurred. You could just tap into it, fix it, and move on. Where a lot of the folks who were not in the flood-prone areas probably didn't have HELOCs, and they didn't think about that.
Yeah, this last storm that went through, as we know, it affected a lot of people that were not in flood zones, and so most of them did not have flood insurance. So, including myself, unfortunately, one of my properties was affected, and it wasn't in a flood zone, and I didn't have flood insurance. So now I'm kicking myself. But we just have to realize that we live in Florida, and every property is in a flood zone.
Flood zone, yeah.
And it's just a matter of time that something could happen, and why not protect yourself for? I want to say it's $800 a year, for the flood insurance.
Right, and that's what I would advise anybody out there buying a new home down here, or buying a home at all, whether it's new or old, to get the flood insurance now. We didn't use it. We look at the map and we'd say, well, you're not in a flood zone area, don't worry about it. But we'd still prefer you to be in that area, not a flood zone area. But get the flood insurance no matter what. So let's talk about. We talked about the potential tax benefits that you can probably write off the interest. Like I said, you're going to get a form at the end of the year saying you paid X dollars in interest. Usually, I would think, if it's spent in your home, that's part of a write-off. Where if you went and got a different kind of a loan, let's say you go out and you want home equity loan, or a personal loan,
or car loan,
or a car loan, or credit card, use the money in your credit cards. That's not deductible no matter what you're talking about.
Right. I still have people use the equity line to consolidate. It's a great tool for that because it is interest-only required payments on whatever you use. So I've saved people thousands of dollars a month.
Instead of paying 25% to the credit card company, they're paying 8% here or whatever.
Or even on a car loan. I see a lot of high payments on car loans. So when you take that amount and put it into an interest-only required payment, it drastically reduces it. Now, I would recommend to keep paying that much because then you'll pay down the principal of the equity line.
Right.
And then there'll be less accumulated interest going forward.
So tell me about what's the difference between a HELOC and a home equity loan?
Great question. So the one, think of it as kind of a credit card on your home. It's a revolving line of credit where you can access it and pay it back as many times as you want. So it's good for 10 years, typically, with most banks.
For the HELOC.
For the HELOC, yep. And then, so that's called your draw period. And then if there's a balance at the end of the draw period, it would turn into a 20-year repayment period at a fixed rate, whatever the rate is in 10 years. So that's the HELOC, but the HE loan, think of it as a car loan or a first mortgage. We give you a lump sum of money at a fixed rate and fixed term. So sometimes that's a better option for people that know exactly how much they need, and they're kind of budget conscious. But I'm a huge fan of the HELOC just because it gives you more options in the future.
Right.
So if you need $50,000 but you qualify for $100,000, why not take the $100,000 option that doesn't cost anything and you don't have to use it?
And again, you have to keep the line of credit open on the HELOC for 2 years.
Correct.
Otherwise, if you say close it up after 1 year, you have to pay the
closing costs that the bank paid for back as an early closure penalty. But there's no reason to close it in my mind unless you sold the property.
Right.
Then it would have to be closed.
Okay.
But you could pay it down to a zero balance at any time, and it could just sit there, and it's not costing you anything.
And it adjusts. So if it like we're hoping that the rates are going to come down now. It's at 8.5 now. We're hoping 8.25 soon. So your payments every month would be dropping down. The interest paid every month. And I don't think we're ever going to get this high again for a long time. So I think it's
don't jinx us now.
Who knows? So I think if they were at 3%, 3.5% just a couple of years ago, that's awesome. So if you borrowed $100,000 today, and you're paying interest only, and it gets that back down to 3%, that's a huge difference between.
And what's also nice about our home equity lines is that we do have a lock rate option within it. So if you borrow that $100,000 on the $200,000 line and the rate drops to 5%, you can lock that in at no cost.
I did not know
and
that.
you just tell us the term. So it could be 5 years, 10 years, 15 years, 20 years.
You start the lock.
Whatever is left on the note is the maximum term that we can go.
So just okay. So Matt, I don't have to call you. If you hit 3.25 here anytime soon, lock mine in.
Absolutely.
So
absolutely.
Remember me. Don't forget. Well, you didn't call me. Okay, so that's interesting. We hate to talk about this, but there are obviously some cons on a HELOC versus a home equity line of credit. Tell me about the differences there and the cons on that.
The cons of the home equity line of credit versus a home equity loan,
yes.
or just in general, those products. Yeah. I'd say the only con that I run into is that people are afraid to put another lien on their property, so that, God forbid, you can't pay it back, well, then we are going to exercise our rights to the property and try to get our money back.
Right.
Now, that's a last case scenario. Because the bank doesn't want the house, right? They cost money to go through that foreclosure process, and then what are they going to do with the house? They have to maintain it too. So I'd say that was the only con in my mind is the lien on the property. I can't think of any other cons to establish. If you own a home and you don't think you're going to sell within 2 years, you should have a home equity line of credit on your property just to have that peace of mind and knowing that you have access to additional funds in case something happens.
Should something happen, right? But if you went out and just got the home equity loan, there's not a lien on your home on that one. It
is, yeah. Both products will place a mortgage on the property. But the home equity loan, I just wouldn't recommend it right now because we're in a downward trend environment, a rate trend environment right now. So why lock in at 7.5? Because our home equity loans, they're a little bit lower. But if the HELOC's going to go down to 7.5% or lower next year,
right,
then you're going to be kicking yourself that you locked it in at a
So one's
a
a
higher
specific rate and specific amount.
Right.
And specific term. And the other is a little bit more open. It's floating.
It's a revolving, kind of like a credit card.
Yeah, and
at a lower rate though than a credit card.
Slightly lower, about a third of it.
No cash back though.
No,
sorry.
Like an airplane.
No rewards.
Those miles on the airplanes.
Right.
All right. Anything else? What else does BayFirst do better than anybody else?
Well, I'd say everything. Yeah, absolutely. I mean, we are a small community bank. We're based out of downtown St. Pete. We were established over 20 years ago, and we've got 12 retail branch locations throughout the Tampa Bay area. And specifically right here in Sarasota, the one on Bee Ridge near Cattleman, and then one on 41 near Sarasota Memorial. We have one downtown Sarasota. There's one off of Myrtle, and then we have one in West Bradenton as well.
Nice.
So just, like I said, a small community bank, trying to make a name for ourselves. They've got really competitive products. And trying to be more involved in the community. We've got all of our branches have what's called a collaboration room. So we open it up to the community to use. It's just a nice area where people can gather and talk about anything. And I think it's a great tool that they're trying to be different, than other banks.
We should have the dads meeting there then.
We can definitely have the dads group meeting. Yeah.
You have to serve some cocktails.
There's already beer there, so
okay.
We can make that happen.
I don't know if you heard that, but he said there's a branch right by Sarasota Memorial Hospital. So all you doctors, anesthesiologists, orthopedic surgeons, nurses, go see Matt, and I'll help you find the home. I'll get you the loan.
There you go.
And then we'll help you get a HELOC on that house and branch out here. There's a lot of opportunity here. Prices have gone up, yes, they have, but this is a beautiful place to be, and I think, you talk about houses either dropping or increasing over the areas. Sarasota is has a very unique zip code by zip code. Houses are increasing in value. So get on that bandwagon now if you want to move in. And the sun and the sand this is just a beautiful place to be. You've been here all your life, so you may not appreciate that as much as a guy coming from Chicago and moving down here and saying, "Wow, why did it take me so long?" Not to knock Chicago; it's a beautiful, beautiful city. But anything else? Anything else about BayFirst?
Not that I know of. We're a full-service bank, so we do
everything,
and we do commercial investments. They've got very competitive rates on their money markets and CDs, and it's a great bank to work for. I've been there for over 3 years, and don't plan on going anywhere
soon.
So,
that's right. As Matt mentioned, also his home did flood, and he has 4 feet of drywall he's got to replace on the floor, and it wasn't pretty, but it was. I mean, I've been in Florida, on the East Coast for a long time, and now on the West Coast over here, 4 years. I've never seen flooding like that. It wasn't even a major hurricane. I think it was a tropical storm at that point.
Right.
So just the amount of rain that came down in that period of time, no place for it to go. But Florida does drain better than almost any state. If that happened up north, you'd have mudslides or a tremendous amount of flooding. The earth doesn't absorb it as much. So small price to pay to live in paradise.
That's it.
Anyway. All right, if you have any questions, reach out to Matt. I give you his number again. I give it to you one more time. I won't give you his cell number.
You can feel free to do the cell. It's on my
cell number.
Card,
okay, the cell number is 239-851-5174.
Got it.
Call Matt. Let's get a HELOC, equity line of credit, and branch out. Let me help you find another home that you can use for an investment property, or help fix up your current home. I've got some great pool people too. Reach out to me. I can recommend some of them. But I'm here to help you, and Matt's here to help you, and together we can find the perfect property here and expand on that. So thank you again for watching Conversations with Kendall and my guest, Matt Brame.
Thank you.
Thank you.